Katie Dean, is it possible that the next move that we see from the RBA is actually a cut rather than a hike?
Yes, good afternoon. Look, I certainly wouldn't rule that out. I think that if we were to see a cut from the RBA, though, it would certainly be driven by offshore factors, not by the domestic economy. Concerns around what's happening in Europe and increasingly the US seem to be front of mind of the RBA at the moment. Interestingly, their discussion in the minutes around what's happening in financial markets was actually placed at the top of the minutes, which is quite unusual. They are very concerned about the rate of slowdown in the global economy. They don't know when that slowdown is going to stop and when the global economy will start to grow again. And they're also very, very closely watching the potential for any severe disruption to financial markets, given how important offshore funding is for the Australian economy. So, look, I think if we were to see a rate cut, it would certainly be driven by these offshore factors, not domestic factors. And given what's happening in global markets at the moment, we can't rule out the next move being down, not up.
Katie Dean, I mean, you're saying it's about external factors, but you do have, of course, this two-speed economy there in Australia. You know, there's a lot of data is at the moment softening there as well. You know, did they say anything about that? Did they highlight any concerns with regard to that possible slowdown actually gathering some momentum?
Yeah, look, the discussion around the risks associated with this two-speed economy was still pretty sanguine. I think that the RBA has long been arguing, at least for the last 18 months or so, that we're going to have to get used to a two-speed economy in Australia, that we've got a very strong mining sector, and that if we're going to keep inflation under control, then that means that the non-mining, interest rate sensitive sectors of the economy are going to need to slow. Now, in the minutes today, they note that economic growth in Australia is about average, but that there's very wide divergences between these different sectors. In the short term, I think these divergences are actually going to widen. There's been a very sharp drop in consumer and business confidence in Australia over the last couple of months, and that's no doubt going to feed through not only, I think, into some further weakness in consumer spending, but potentially also a further slowing in employment growth. But I don't think that's going to be enough to alter the RBA's medium-term view. They remain very upbeat about the Australian economy over the 2012-2013 period, because, as they say in the minutes, they're still very upbeat around prospects in the Asian region. So I think that a deeper slowdown in these interest rate sensitive sectors over the short term isn't going to be enough to see the RBA come in and reverse their policy, but it certainly will be enough for the RBA to stay on hold for what I think is going to be a fairly extended period.